payroll tax problems are really probably the worst IRS tax problems that you can have. And it's not uncommon for business owners that have employees to end up with payroll tax problems. In fact, when I first went out into private practice and I hired my first employee, I actually ended up with a payroll tax problem. And that's how I ended up ultimately becoming an IRS problem resolution attorney, is because when I went looking for help, there was no one out there that I could find, at least, to help me with my problem. I ended up solving it, and I ended up learning a whole lot more about IRS problems than I ever imagined. But the most common way that small business owners in particular get into payroll tax problems is they pay something called net payroll. In other words, they pay their employees because cash is tight, but they don't pay the taxes. And before you know it, it doesn't take very long before that steamrolls out of control and really large balances end up ensuing. The penalties for failing to file your payroll taxes and making late payroll deposits are onerous. I mean, that's to say the least. They are really incredible. And so I always encourage small business owners that are having payroll tax problems to go ahead and get a payroll company, or sometimes employee leasing. It's kind of the same thing. And stop making net payroll payments. You've got to stop the bleeding, because what most small business owners do in this instance is they do what it's called pyramiding. They instead of paying their current obligations, they'll throw whatever spare cash they have at the old problem. And what that does is you can never solve the problem, because you're always going to just have, their next pay period is going to incur another penalty, and it's just going to go on forever. So this seems maybe a little bit counterintuitive, but I always tell people that if you have your choice between paying back tax and current tax, you should always pay your current tax. At least then you can put an end to it, and you're dealing with a finite liability and not an infinite liability. What happens is, in payroll tax cases, if the principal owner doesn't end up settling the case in some way or another, either by full paying or entering into an installment agreement with the IRS is going to assess something called the trust fund recovery penalty against the individual principal. Sometimes there's more than one principal. In other words, there's more than what the IRS calls a responsible party. And the responsible party test is not really all that hard for the IRS to meet. Basically, they just have to show that it was willful, And willful doesn't mean, you can't use the excuse, well, I just didn't have the money. That's not a good enough excuse. Not paying and knowing that it wasn't not paying is enough. So when the IRS imposes the trust fund recovery penalty, which incidentally is the subject of another video, but what they do is they take a look at the entire payroll liability, and they assess half of the FICA, half of the Medicare, and 100% of the federal income tax for each payroll liability, and they assess that amount against the individual responsible. So in my experience, that comes out to somewhere between 60 and 70% of the total. They assess that against the responsible individual, and then they try to attempt to collect that from the responsible individual as well as from the business. So, and a lot of times the business has gone out of business. It failed, and then the IRS still has the opportunity and ability to go after the responsible individual. How do you solve payroll tax problems? Well, they're hard to solve, because it's usually a cash flow problem. It's usually more of a business problem than it is a tax problem. But what we typically do is we fill out a Form 433B, which is a collection information statement for businesses, and we attempt to enter into an installment agreement. And the installment agreement, usually the IRS is going to want that installment agreement to full pay the liability with penalties and interest within 2 or 3 years. So a lot of times it's really aggressive installment agreement. They're going to want thousands of dollars per month. It's really fact specific, and it's a case-by-case basis. So it's really hard for me to get into too much more detail here. Theoretically, you could file an offer and compromise, but it's against public policy for the IRS to accept an offer and compromise for an in-business company that has a payroll tax problem. And I think the reason that is because if, for example, you own a cleaning company and you get an offer and compromise and you didn't have to pay your back payroll taxes, then that would give you an unfair advantage in the marketplace that the other cleaning companies that did pay their payroll taxes, didn't have the ability to do. So there are other options that are just far more detailed than we can go into on a little video like this. But if you have a payroll tax problem or really any other problem with the IRS, please give us a call at 888-438-6474. That's 888-438-6474, or visit our website at getirshelpnow.com.